All right, what is up, traders? What's up, tycoons? Got to do an update on TLT. We've got to talk about the bond market. But before we dive into the bond market, there's a few charts that I want to show you guys and just really cover that I think are very important. We're going to start off here with the S&P 500. Trading in this bullish channel here. We'll go over what I think is going to be really important for this. And then we'll really have to talk about energy. Now, what's interesting is you guys may not know this, but since the COVID lows, energy has been the top performing sector. It has actually outperformed tech, right? Which really sounds crazy. And normally in that type of environment, you're not really seeing a bullish market, right? Typically, energy outperforming the rest of the market, is not your normal sign of a raging bull market like the one we've been in. And even if we take a look at the past month, energy, or really not even the past month, but just since the start of 2024, energy is the top performing sector of the year. So we'll talk briefly about energy. I just dropped a completely dedicated video to energy, but a lot of people may miss it. So I just want to touch on a couple points. Feel free to watch that video. It just dropped on the channel right before this one. And then we're going to talk about tech some more. Okay. We've got a ratio chart here of tech. We talk about these false moves lead to fast moves, and we see we're breaking down right here. We've got another one here with the Magnificent Seven stocks. We'll break down what it is that we're looking at on this chart specifically. Okay. And then we'll talk about TLT. Okay. We'll get into TLT. And there's very actionable trades and very actionable, things and steps that you can take, from some of the things that you learn in these videos, right? And, I've talked about some key levels. I've talked about many different things. And, today took some very nice profits on TLT. I think at one point I had about 40 or 50 contracts, but, no reason not to take profit. And we're very close to my key level right here anyways. So I'm not looking to be all over the place. All right. And of course, if you're going to be looking at yields or bonds, you really need to be paying attention to yields. Okay. So we'll take a look at the 10-year treasury yield. This is the most commonly looked at yield instrument. We'll talk about the cup and handle it had right here. If this is potentially a false breakout or really just the beginning of a potential move higher. Right. And one thing that really helped to reinforce, the short position on TLT was there's an ETF called EQRR. This is an equities for rising rates ETF. Okay, so what this means is that someone invented this ETF, and it's an ETF that's going to thrive and benefit and do well if yields and rates are going to be rising. And it looked very good. It looked like it was about to start breaking out, and it really made me take a lot of things into consideration. Now, I showed this chart way before this massive breakout, and spoke about a lot of things, spoke about a lot of main components of this ETF. So you're going to want to subscribe to the channel so you guys don't miss this valuable information that I try to put out there for you guys, all completely for free. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And I actually started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free, valuable finance and trading content related to the markets. And I also try to sprinkle in a free trade idea in there as well. And there's a website associated with it too. So you can go back, you can read some of the previous newsletters. In March, I wrote multiple times about energy. We've seen energy really continue its breakout, continue to be a leader in the market. And there were lots of good plays that you could have, taken action on from the newsletter via those energy, articles that we sent out. So if you like it and it's something you want sent directly to your email, you can sign up using that link in the description, or you can join the Investment Intelligence Discord. Okay, that's where you get access to all my plays, all my different analysis, all my different trade ideas, custom scripts, indicators, valuable resources, and many, many more, right? So, these are what some of the trade ideas will look like. These are all just basically from today. I just redid this little slide. So Tilray, we were talking about Tilray, one of the cannabis stocks. Cannabis stocks have been raging a lot lately. Mentioning the tight risk reward ratio, looking for a 3-to-1 risk to reward ratio, targeting 254. We hit 254, took some profits. We hit the next bullish price target at 271, took some profits. And today it ended up closing at 285. Very nice profits there. Contracts expire relatively soon, so the last couple runners that I had went ahead and we closed those 145% gains, in Tilray there. And then Valero was an energy name. This was one that was showing a lot of strength and a lot of signs of a potential breakout before energy itself as a sector broke out. This was a nice 2-to-1 risk to reward ratio trade, and it's blown way past the initial 166 bullish price target. Closed today at 180. So that was a 300% play. Closed the last VLO contract out, as those also expire, pretty soon. It's in a couple weeks. But we've got some nice exposure to the energy sector as a whole, up 100%. So, these charts, they were posted in the Discord for all of the members, all these trade ideas, and there's many, many more. Okay, I post 20 plus swing trade ideas every single week. And to gain access to all of those, it's only $10 a month. Now, let's start off here, get into the video with the SPY. Okay, so we're looking at the S&P 500 SPY ETF. And why are we looking at this? Well, the big thing that I'm looking at, right? The big question you want to, that the market will answer for us shortly is, are we potentially on the verge of a breakdown, right? We've got this nice bullish channel. The structure is very clean. It's very clear there. And if we lose, let's just call it 517.50, was resistance over here, right? And it was support over here. We're holding above there. If we lose that level, it's very possible that we could see a downturn. Okay, this could very well turn into a double top, right, with the top here, and think of this kind of as our neckline a little bit. If we break down below there, I'm not saying we're going to crash and the SPY is going all the way back down to 480. Definitely not saying that. But what I do want people to consider is, there's some gaps on the chart, right? There's a couple gaps down. And, if we were to see a correction in the market, it would be perfectly healthy for higher lows on the much larger time frames, right? Like a daily time frame or a weekly time frame. Now, that doesn't mean that it's over for the bulls. Okay, there's a couple key levels here. We've got 521.60. That's going to be your 61.8% Fibonacci retracement from the recent highs to the recent lows. If you start trading and holding above 521.60, the odds greatly increase of a 100% retracement back to the previous all-time highs. Okay, so that's something you want to consider, and something that I want to remind you guys about. That's going to be a pretty key level. This little blue line right here, this is an anchored VWAP. So we've got the volume weighted average price anchored to the all-time high candle here. And you can see that that was resistance, right? We had a strong rally off that 517.50 area. And look at where it found resistance, at that anchored VWAP. If we start trading above that anchored VWAP, that's going to let us know that bulls are starting to get control of price action again and could potentially get us above that 521.60. But ultimately, I'm bearish on the SPY if we're below this anchored VWAP. And it's just that simple for me, right? Ultimately, we're not looking for a breakdown yet until we break below 517.50. But as of now, shorter term, the sellers are in control below that anchored VWAP. So that's the main thing that you need to pay attention to. You need to ask yourself, well, what could potentially lead to the market pulling back? Well, as we talked about, energy has actually been the top performing sector since COVID, since the COVID lows. Now, that's largely due to how drastic the drop was in energy stocks. And so the recovery has been a lot stronger, right? But even when you look year to date, XLE Energy is the top performing sector with XLC Communications right behind it. So, the market is really favoring energy at the moment, and it's a much different environment than what we saw in 2023, right? If you look at 2023, we can see that energy wasn't really the best, right? I mean, here, energy kind of really just went sideways, consolidated for most of the year with some swings up, some swings down, but it's really just gone parabolic. As you can see, it's pretty much just a straight line up ever since the year started for energy. And when you take a look at this chart right here, this is a ratio chart. Okay, so you've got XLE divided by the SPY. And what this lets you know is that, hey, when this chart is going down, this means that the market is outperforming energy, right? So SPY outperforming energy. And what do we see here? Well, we've seen this recent uptick And if you're a longtime fan of the channel, this chart is old. Okay, this chart is very old. Since 2023, I've been posting this chart and this analysis, and it's following very, very well. And what this suggests, okay, using a little bit of Elliott wave theory, is that if this was a 5-wave structure move to the upside, and we did get an ABC correction here into a perfectly healthy zone to get that correction, well, this could mean and could be the start of a new 5-wave structure to the upside, where we start to see energy continue to outperform potentially for the rest of the year. It's just something to consider, right? Now, false moves often lead to fast moves. This is something that I'm trying to emphasize a lot more on the channel and just bring to people's attention. I used to talk about look below and fail, look above and fail. And that really, I don't think always got the point across. So, here we have this false breakdown, right? This false move. This is where the bears, energy bears, are really going to get optimistic and press on the shorts. That did not happen. And what do we see? Well, we've seen a strong recovery since then. And this could be the start of leg one up here on this ratio chart. Okay. Remember, if this is going up, it means that energy is going to be outperforming the broader market. Now, this is another false move leading to a fast move. This is XLK divided by SPY. So as this is going up, it means tech is outperforming SPY. And as it goes down, it means that tech is underperforming SPY, right? We all know, and the whole narrative of 2023 was, oh, this bull market can't last because it's only the Magnificent Seven, the big tech stocks that are leading the market. We're not seeing a broader market rally. That narrative is not usable anymore. It's not valid, right? It wasn't necessarily the case that there was only 7 or 10 stocks rallying last year. There were many stocks that we were making money on and trading in the Discord besides the Magnificent Seven. But, here, what do we see? Well, we've got some supply. We've got some overhead supply. We have a false breakout to the upside. And look at that. It leads to a fast move to the downside. And we've broken this trend line here. And as I mentioned, if we break this trend line and this was a false move, we're looking for a fast move for this to head down. If this is going to continue in a downward direction, this is going to be something that is a headwind for the market. Again, we know how heavy weighted it is in tech. And if tech is underperforming the broader market, well, then it's very possible that that could cause a correction in the market, which brings us back to that SPY chart, okay, that original SPY chart that we looked at. Okay, now this is not a guarantee that this is going to happen, but it's diving beneath the surface, okay? I like to call it looking under the hood of the market, right? And so, we looked at the outside of the car, right? And we said, oh, looks like something might be wrong with the car, right? And when you dive underneath and we look to see, hey, can we potentially get that double top to play out? Can the bullish channel potentially break out? What are some of the things that may cause that? What could lead to that? These are a couple of the things right here. Now, this is the MAG 7 stocks divided by the SPY. Okay, so this is the MAGS ETF, MAGS is the ticker symbol for that. And what do we see here? Well, we see, uptrend, nice uptrend. And we've actually broken this uptrend and we're coming up here now and retesting it. So again, we have to ask ourselves a question, right? And what's that question? Is what's the broader market? What's the SPY? What's the SPX going to do if this chart rejects up here and starts to continue down in a downtrend, right? We emphasized the heavy weight that the market has towards these big tech stocks, towards the Magnificent Seven stocks. And if we already see tech rolling over relative to the SPY, and we already see, and now we have a potential opportunity for the Magnificent Seven to start rolling over relative to the SPY, well, that could put some serious headwinds on for the market. Now, this isn't confirmed yet, okay? This could turn into a false move to the downside and lead to a fast move to the upside. But these are just things you want to consider, right? Which is why I'm bringing them to your attention so you guys can be prepared, analyze some of these things, look at them yourself, and stay up to date with them. Now, we've got our daily chart here for TLT. There's a few big things I'm watching. Now, 92.20 was the big level for me, okay? And that initially was basically the, take profit zone for shorts, right? Now, if you're new to the channel, I've been covering TLT on here for years. And one of the best signals, in my opinion, for, potential trade opportunities on TLT has always been the MACD on the daily time frame. Anytime you get a crossover, whether it's bullish or bearish. In this case, a bearish crossover. And you see we get that bearish crossover here, and we get downward price action, right? Then we get a bullish crossover here. We get some nice upwards price action. Bearish crossover here, nice downward action. And what did we get? Well, we got bearish crossover right here on this gap down. Now, this is a day where most people would not look to enter into a short because they're saying, oh, it's already down so much, it could be oversold on some smaller time frames. I don't want to enter a short here, but that's exactly what I was looking at is, this is a market at the end of the day that's still a bull market. And you have to remember that you don't want to be shorting strength, right? If you're seeing something going up, that's not necessarily a signal to short, right? And so if you're looking to short, you really need to be shorting weakness. And that's what we were seeing here. And then we continue to see the candlesticks go lower. We gap down and, again after that, and we're continuing to remain below that 92.20 level. Okay, now I've pretty much taken profit on most of the TLT. As you guys can see, those contracts went up over 150% and above 92.20. I'm not looking to short it anymore. I'm going to close those, whatever they're at, get out, and really just using 92.20 as my guideline, right? Below there, TLT has a possibility, guys, to really drop down to the 89.50 area. And here's where things may get a little bit scary for some people, right? It all just depends on your trade ideas, your time horizon, and what your goals are. But, if we don't find support, above this 89.50 area or around there, we've got not only one, but we've got two gaps down to fill on TLT, all the way down to 88 and all the way down to 85. So these are some things that you really want to be cautious of. If TLT drops below 89.50, it's very possible that we can see those gaps fill. And it's still a pretty far drop from where we're at right now, trading at 92. Now, those are no guarantees that, just because we're below 92.20, we're coming all the way down to 85. It's more about level to level and taking your time and, respecting what the market's telling you. And so, we've got that bearish crossover. The thing that I'm worried about, if we can't get above this 92.20 level, is look at this floor that we've got on the RSI, right? And so when we talk about weakness and in a bull market, if you are going to be brave enough to short something, you need to do it into weakness. And so the dash line right here is 50. And we can see after that gap down is trading well below 50. And we look at where we're at right now, there's no relative strength in the market. Now, one could call this a bullish divergence, okay? And you could say that, right? Because we've got lower lows here, but we've got equal lows. So we do have a little bit of a slight bullish divergence on the RSI. But I'm worried if we lose this RSI, could that potentially mean that we're going to be heading back down towards that 89.50 level and potentially even breaking down lower, right? The main thing you want to pay attention to, obviously, is going to be yields, okay? Treasury yields. We've got a very clean cup and handle right here, and we came up right into this overhead supply zone. The interesting thing here is that the bottom of this supply zone is also your cup and handle neckline, right? So, you've got your cup and handle here, breakout, retest. Could it be breaking out, or could it just be retesting to potentially head higher? 4.535 is going to be the target if TNX and treasury yields continue to go higher. So that's one thing you really want to consider as a possibility. Now, again, focusing on the false moves lead to fast moves, right? If this is a false breakout to the upside right here, right, and this cup and handle pattern fails, that could potentially lead to yields rolling over, right? And if yields are rolling over and coming down, well, we know that that's bullish typically for bonds. So, if we do come down and we break through 4.35, 4.25 is going to be your next key zone. And, above 4.35, we're looking to potentially be targeting 4.53. Okay. So those are really the key levels that I'm watching when it comes to the market. What it is that I've really been paying attention, what I've noticed is different about this market environment from the previous market environment. And, what I've been up to with TLT and a couple of other names. Now, I do want to mention this EQRR ETF. Not many people know about this. It's something that I discovered, not too long ago. And again, it's an equities for rising rates ETF. So, this ETF looks to benefit in a rising rate environment where interest rates are going higher. And what do we see? Well, it had this huge base right here, this huge multi-year base, and just absolutely ripped to the upside. Now, what's interesting about it is the big components of it is one, energy, right? And so that's what really made me even like energy more. Another one was materials. So XLB has been performing very, very well. And then XLF. So you've got like the three biggest components of this ETF right here, all performing very, very well. And it's no coincidence that you're seeing this ETF just absolutely skyrocket. So, it's something that I'm going to be paying attention to a lot more. And as it provided a buy signal for certain areas of the market for me here recently, I think it could be something that potentially leads to future buy and sell signals or opportunities, based on what this ETF is doing. Because you have to remember, if you're seeing this ETF go up, the market is telling you that they're expecting rising rates or that we're in a rising rate environment. Meanwhile, the media for the past 6 months has been telling you we're getting rate cuts, we're getting rate cuts, and we see that the market has already gone from pricing in 6 rate cuts to 5 rate cuts to 4 rate cuts to 3 rate cuts, and it just keeps going lower. The trend is going lower in the amount of rate cuts. So if that trend is going lower, it makes sense to see the rising rates, breaking out and continuing its uptrend here. So that's all I wanted to touch on. I really hope you enjoyed today's video. If you did and you want to join the Discord, remember the link is in the description for that. That's where you can gain access to all the different trade ideas, analysis, and much, much more inside of that Discord. And if you don't want to pay, there's a completely free newsletter for you guys. Either way, I'm trying to provide value through both services, and I think you'll enjoy either one of them or both of them if you sign up for them. Links are all in the description. Thanks again for watching, and don't forget to smash the like button and subscribe for more.